All right. Good morning, everyone. It is 8:45 in the morning of December 2nd, 2021, and this is my trading strategy session. Pardon me. So the first thing that we have up today is SNOW, SNOW. It reported earnings today. So there's an upside surprise on earnings of 164, roughly 165%. And revenues came in at a surprise of 9.43%. And guidance, they're putting forward guidance as very positive for the next coming year, 2022. So it's catching a bid this morning. It is up 13% from its previous close. Its previous close was at $311 per share. It's at $351 per share right now, so it's up $40 per share pre-market. Then, the strategy on this one is to continue moving the Fibonacci's until the open, and then find where the open is, find where the 75% level is, where the 61.8 is, where the 50% level is, and then use those to trade off of. A dip down and a break past the open is a buy, a dip down below the 75 and a break back above the 75 is a buy. And then I'll probably just not, I'm probably not going to try and average into the 61.8 to 50% range on this one, because if this one goes all the way down to the 50% level, then I'll look for a bounce off the 50% level. And we'll see how fast the action is at the open. If the open has a really fast action and starts dropping down really fast, then I'll wait for the 50% level. Okay, so VIR. VIR is up on some news that it has partnered with, who is it, GlaxoSmithKline. The news that it partnered with GlaxoSmithKline actually came out quite some time ago. Let's see, I think it was somewhere, well, it was 26, maybe not that long ago, but somewhere in this area right here, between the 24th and the 26th, news came out that VIR Biotechnology is partnering with GlaxoSmithKline. And as soon as that partnership was announced, it caught a bid. Now, this morning, it's catching a bid because VIR's Xevudy gets UK approval for treating high-risk patients with mild to moderate COVID-19. So it's a headline. It'll create some motion for trading. And so once again, you can see here actually pre-market here popped up to as high as 58 per share. And now it's just kind of selling off. So again, I'll put a Fibonacci on it, move the Fibonacci as the price gets closer to the open, and then when it opens, put a mark on the opening price, and then use the same strategy for VIR as I do for SNOW and all the other Fibonacci sort of strategies that I use. Boeing here, this is interesting. So Boeing was just given a green light by the Chinese. Let's see. Okay. Boeing 737 MAX airplane gets airworthiness directive in China. So Boeing is about to sell a whole bunch of 737s to China. So it's catching a bid this morning, and again, same strategy. I'll move this Fibonacci, around to the open. And actually, this will Boeing will actually probably be my number one pick for the one that I'll pay the most attention to. SNOW and VIR, I'm not as familiar with, and Boeing, I've traded it a few times, and it tends to behave well according to the Fibonacci trade that I like to perform. So I'm going to put Boeing up here at the top. And then last is the CPIX. I got a really good trade off of CPIX back here on this day on the 30th, and managed to get a majority of this move here from, I was in at the low fours, I think it was 408 per share, and I managed to sell it 525 per share. And then I held on to some shares in order to kind of let it do its thing. In recent experience here, we've seen these stocks now. This stock CPIX was just given a green light by the FDA. Let's see here. Let's pull it up. Cumberland Pharmaceuticals gets expanded labeling approval from FDA for Caldolor. Stocks surge after hours. So on this day right here, I traded it and managed to do pretty well on it. I did a good job on it. And I held on to some shares. And the idea here is that in recent history, I've seen these small cap companies come out with, which is some really good news. Hang on just a second. I'm sorry. I'm going to have to take a phone call real quick. Hello? Yes, hi. Is this Miss Mosley? Miss Mosley, can I call you right back in say like 5 to 10 minutes? Okay, thank you. I appreciate it. Bye bye. Okay, sorry about that dead air there. I should have some music ready to go uh, when I get interrupted like that. Anyway, okay. What I've seen lately is you can see here the volume on this trading day was 207 million shares. And that is an enormous number of shares to be traded on a stock that only moved, let's see, from the high to the low was $1.45. And let's see, from bottom to top, it moved 36%. So a stock that has 207 million shares of trading, I would expect to see it moving by, like $10, per share. I wouldn't be surprised to see, if before, and it's small caps have been doing this now for a while, for like probably over a year. They've just gotten extremely noisy, and the momentum trade has become extremely unreliable. So, fortunately, I just bought this in the morning and held on to it through all the noise until it started to look like it was peaking out. So, but what I've noticed lately is that after a small cap like this has this gigantic move in volume and a very muted, what I would call muted move in price, a few days later, it just all of a sudden goes zoo. So I'm holding on to some shares on CPIX. I have it on watch. I'm not really trading it. I already have a position in it. And so I'm just kind of waiting for the day when it just starts to, if it does it, where it just takes off. And an example of this, and there are a few, I should go back and find some more examples of this, but a most recent example of this is ISPC. So this thing got its news here on the 22nd. I forgot. Oh yeah, it won a government contract of some kind for COVID testing or something like that. And so here on this day, it traded we'll call it 99 million shares, right? In the range on 99 million shares, the total range on this thing was, well, actually, that's kind of respectful. $4.71. You can see there, $4.71 for a 58% move. That's kind of okay. It actually popped up and sold off again. But then you'll notice the next day it popped up much higher, and then it came down, and then popped up and went much, much higher. There's some kind of strange noise thing happening on small cap momentum stocks now that causes the move to get delayed, elongated. Usually you'd see all of this move from here up to here. You would usually see that all in one day, previous to, I don't know, recent history, I'd say the past year or so. And so the idea with CPIX is to just kind of sit and wait it out and see if I can get the move that'll take it up to say $10 a share, or who knows. I could be totally wrong. I might have to get out of it with a loss if it like goes all the way back down. I mean, I can't imagine that it would go all the way back down to this $2 level. Anything can happen. But I imagine after an FDA approval that someone's going to want this stock. So, all right. we'll see how it goes. Okay, broader market here. So yesterday was a very bearish day here. It started out quite well. I had some decent early trades. It was kind of nice. I was like, okay, started out near the high of the previous day's candle, popped up, and then just started selling off, I don't know, probably an hour into the day. Let's see. Let's go back here and take a look. Yeah, so so it popped up to about 11:30, so 2 hours into the day, and then just spent the rest of the day selling off. And it's significant. The daily chart here, this is a significant move. It's not a reversal because the previous day was a red day, but this is saying this thing's selling off. And there's something else too, is that the dollar and the 10-year actually kind of projected this. I was watching this, and while everybody was getting bullish, I was kind of getting out of positions here. Let me go to large caps and stuff and look at the dollar real quick. Put my risk range. Is it my risk? Yeah, there's my risk range. So dollar, where are you? Why don't I see you? There we go. Okay. So the rise in the dollar, along with risk range, along with the falling 10-year, the falling yields, and the whole entire yield curve is collapsing. That the bond market always gets it right. And this is a big warning signal. This move down right here in yields means that people are moving to safety. People are going to, they're buying, the 10-year, which means that they're expecting some turbulence in the market ahead. And so that was flagging. At the same time, dollar demand was going up, so people were moving to cash. And this move has actually been happening since mid-year. This stronger dollar move has been happening since mid-year. And yeah, the same thing's true with the 10-year, So, well, actually, that's not true. The 10-year started in October. So, the SPY, it's hard to say, exactly where this thing will find a floor. There are a lot of gaps in this move up that need to be repaired. There's some technicals in the charts that need to be repaired. And there's actually still this gap all the way down here at 400 to 403. You can see here there's this gap up right here between April 1st and April 5th. It gapped up. And so it's possible, that the SPY could come all the way down to that gap. That would be an enormous correction. I wonder if that would actually put it in bear territory. Let's see, from top down here, let's say to the bottom of the gap, that would be a negative 15% move. That would be a correction. It wouldn't be quite a bear market, but it would be a correction. So that's possible. I don't know. This candle is indicative of more downward motion to come. I think we might get a bounce here. It's possible we'll get a bounce here and kind of then go down. Anything's possible. So what happens exactly, I'm not sure. But a break below, a movement below this close right here on this day at, what was that, 450, 450.55 roughly. Then there's more downside to go. So we'll see what happens. All right. So that's going to be my pre-market strategy session for the morning. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at the recap. I am out.